Hi, I'm Pattu from freefincal. Today, let's talk about, is it the time to book profits from mutual funds? So every time when the market is at an all-time high, investors get edgy. They get nervous, and they want to know if they should start booking partial profits or whatever. Especially in this year, when we saw the biggest intraday fall on the March 23rd. At that point in time, the 10-year Nifty SIP had gone down to 2.3%, and the 14-year SIP had gone to 5%. And from that point on, just months later, and within the same year itself, the annual year itself, the Nifty or the Sensex hitting all-time high is just crazy. I received an interesting question. Uh, among others, he said, what percentage of appreciation will you classify as a stellar return? One of my large cap funds is at 11% appreciation on an investment of 1 lakh. Do you think it's a good idea to, a good time to rebalance? The question on YouTube. Uh, well, let's talk about this. Let's talk about who should book profits and who should not. I had already done your tactical study, that is a market timing strategy based on an all-time high. That is, if you start booking profits on all-time high, what happens and so on. As usual, many strategies don't behave as one would expect intuitively, and even if for the strategies that do work, they don't work all the time. So you can have a look at that. Go to that link and have a look at that study. I think I've made a video on this before, I don't remember. All right, so before we begin, some basics. This profit booking idea is a very crude term for a redemption. There's no way you can book just the profits. For example, if 100 rupees becomes 110 rupees, you can't just remove that 10 rupee gain. That's not possible. When you make a redemption in a mutual fund, it will always be partly the amount you invested, the principal plus the gain or loss. So you can't you know talk about profit booking literally. Of course, what it just means is a redemption. So who are the people who should book profits? Now, if you are invested 100% in equity, then please remove some equity and put it into fixed income. Have an asset allocation that's suitable for your goals. Have a plan of how you're going to vary these asset allocation in future, and work as per that. And if you need the money within the next 5 years, pull out completely. Thank your lucky stars that you survived the crash and still you just got lucky, that's all. And exit completely to the 60 of all to debt. And if your equity exposure is higher, that is, if you intended the equity exposure to be about 50% or 60%, and it's gone up by about 10%, then you take the 10% and push it to debt. Then you should do some kind of profit bookings, within quotes. Now, and also, if you need the money within the next 10 years, then it's a very good time for you to reduce your asset allocation. For example, I started investing for my son's future in December 2009, a month before he was born. And that time I had 18 years with me. But today I just have about 8 years. So I found that the asset allocation was 67% just yesterday, and I reduced it by about 12 to 13% to about 54% or so. I'll talk about that in greater detail in my audit, but because I have only 8 years before the first withdrawal. That first withdrawal means assuming he will do UG, PG, etc. At least he will do UG. I don't know. I will need the first withdrawal in about 8 years, so I have reduced my asset allocation. Also, people who use these kind of robo portals, for investments and so on, they recommend four large cap funds, five mid cap funds, five small cap funds. This is a good time to consolidate your portfolio and reduce the number of funds. You can do that keeping in mind that 1 lakh tax free limit, and also remove units which are free from exit load. Now, who are the investors who should not be doing anything? Please don't look at returns and redeem from mutual funds. On March 23rd, that is the day of the biggest fall, the intraday fall, my retirement portfolio had crashed to 2.75%. People started asking, what is this? Did you not book profits? What kind of mutual funds are you invested in? How can you be such a bad investor? And so on. By September 2020, the return shot up from 2.75% to 9%. Now, when I checked yesterday, it has become 13%. So, I was a good investor in January 2020. I was a terrible investor in March 2020. I became a mediocre investor in September 2020, and December I'm a very good investor. This is how the markets behave. I keep telling people, don't look at returns, it'll just keep fluctuating. They just don't listen to me. I think it's something that people have to live and learn. During all this time, my equity asset allocation just varied by 7%. In March, it was 55% equity, 58% in September. Now it has become 62%. And from December to December, that is from 2019 to 2020, the equity allocation has only increased by about 4%. My financial independence status has not changed in any way. Just my returns are fluctuating. That's what I keep saying. Don't look at returns. Always make changes to your portfolio depending on the asset allocation. So you may have got 25% returns, 25% XIRR, but your equity allocation may just be about 10% or 15%. So it makes no sense to book partial profits or whatever it's called. It just makes no sense. Then the other class of people is those who have very low equity exposure, but for their goal they need 50% or 60% equity exposure, but they have very debt heavy portfolios and they have only 20% or 30% equity. They also should not do anything. Just leave it alone. Don't worry about all this all-time highs and so on. Just leave it alone. You are well below the desired asset allocation, and therefore you should not do anything. So I just keep saying this again and again. Asset allocation is everything. If you want to start investing right from scratch, I will link a free seminar. It will talk about the basics of portfolio construction. It's right there in the description. Please go through that. That's a guide for beginners, and then you don't have to worry about market all-time highs, all-time lows, whatever. You can just focus on your asset allocation and be calm. Bye bye.